It's a recurring crisis that happens every 80 to 100 years, and it's deeply transformational. The last two fourth turnings included the American Civil War and World War II. And we find ourselves currently in a fourth turning. It's a time of heightened crisis and conflict. Society undergoes a cultural shift, and the community becomes much more important than it was before. Welcome. This is the webinar where we're going to look at investing during a fourth turning. And it's an event for the long-term trends community. First, a short disclaimer, like none of this should be considered financial advice. This is for educational purposes only. I'm not a financial advisor. And before making any investment decisions, do your homework, basically. Also, another disclaimer I realized when preparing for this webinar was I'll have to generalize a lot when talking about these seasons of history, about these generations. You generalize a lot, but I guess that's just a little bit in the nature of when you study these long cycles and this secular shifts that we can experience in society. Let's start by looking at what even is the fourth turning, right? When we talk about investing during a fourth turning, let's first look at what it is. So it's a recurring crisis that happens every 80 to 100 years, and it's deeply transformational. It's characterized by a lot of conflict, internal conflict within nations, domestic and also external conflict. That could be militarily between nations. It's characterized by deep polarization between different value camps. We'll go into that also later. It's characterized by institutional dismantling, where institutions that no longer work, they get replaced or they get fixed, basically. Just for historical context, the last two fourth turnings included the American Civil War and World War II. So we're talking about something that's critical. We're talking about huge events, basically. And we find ourselves currently in a fourth turning, and it started in 2008 with the financial crisis. What are symptoms of a fourth turning? There's deep societal division. There's institutional collapse. The trust in institutions really goes away in universities, in the government, in military, in all kinds of institutions. It's a time of heightened crisis and conflict. It's also a time where society undergoes a cultural shift, and the community becomes much more important than it was before. It's a time of shared sacrifice, like when you imagine past fourth turnings, like the Civil War, like the World War II for all kinds of nations. It was a time of shared sacrifice. Nations fought for their survival, civic engagement, and in the end, establishing a new order. It's also characterized by economic upheaval, economic instability, typically high public debt, high leverage, high indebtedness for nations, for sovereigns, but also for companies. We find ourselves since 2008. We find ourselves in the current fourth turning. The catalyst was 2008. Interestingly, also the last fourth turning before the Second World War started with the financial crisis of 1929. and the following great Great Recession. And we also like there's plenty of evidence. It's funny, like when the concept of the fourth turning was first introduced, that was a very different world. Now there's plenty of polarization. Um, so we can see that, of course, um, in the United States, in the last elections, in red camp, blue camp, but we can also see it in Europe. There's plenty of polarization in many societies right now. There's really low trust in institutions right now. Um, yeah, we don't trust our governments, we don't trust our universities, and a lot of them seem corrupt and dysfunctional, and nothing seems fair. Like for example, the new tax bill in the United States that's being discussed right now, that doesn't seem fair at all to most people. Um, it's also a time where the call for leadership is strong, um, and nations start electing autocratic leaders, uh, like maybe Mao Zedong in the last cycle, and now we have plenty of autocratic leaders when we look around. Of course, Trump is pretty autocratic. Doesn't allow for a lot of let's say criticism. Putin is pretty autocratic. Xi Jinping in China. But there's plenty. Also, I think Modi in India. There's plenty of autocratic leaders right now, and that's very typical of a fourth turning. And we see heightened conflicts in geopolitics as well. We see it in Ukraine. We see it around Taiwan. We see it in the Middle East. So that's typical, even though we haven't seen the peak yet, probably, because as we see here on the next slide, the fourth turning goes through different stages. There's it starts with a catalyst that was what we saw in 2008, that disrupted the existing order, and yeah, initiated also a sense of urgency, a sense of crisis. And the the next three stages of the fourth turning we haven't really seen yet. Maybe we have seen maybe glimpses of the second one, which is the old institutions really falter, and society starts to to unify again, around shared values, emerging principles. The third stage is the climax of the crisis, and the institutions really fail. We might see that with NATO. We might see that in the European Union. We might see that in many places. But the third stage of the crisis is um, the danger really peaks, really escalates. We saw that in the U.S. Civil War. We saw that in World War II. Uh, and um, yeah, it's marked by intense societal conflict. Yeah, it's a severe test of the old structures. And so we come to the resolution after this huge test. Um, and this is when society rebuilds its institutions. It creates new institutions, new norms, and there's a new sense of collective purpose. And from a societal and cultural point of view, um, um, it's really interesting because these are the times when societies experience these shifts, also reduced inequality. There's a stronger community bond. Um, there's a new sense of national identity. There's new shared values. There's no longer those two camps that we can see everywhere right now. There's a new national identity, new shared values, And yeah, everybody kind of bands together toward common goals. So let's introduce Neil Howe. He is a historian and a demographer. He yeah, he really studies social change, even though now he works as a financial advisor. Um, and his key contributions he include co-authoring the book Generations in 1991 and The Fourth Turning also in the 90s, I believe, together with William Strauss. Unfortunately, William Strauss passed away, and so Neil Howe continued publishing, and he authored the book Millennials Rising, which is a term that he coined, millennials. He introduced that term, and it caught on, and so we still use it. And he also published in summer 2023. He published The Fourth Turning is Here, where he just updated his framework and added more data to show to kind of, I guess, to prove the framework, to prove his hypothesis. And he continues doing that. Um, he has a Substack that I love to follow as well. Um, and I really like how he uh, like looks at the world and current events through his lens of a historian and of a demographer. So these are the two authors, Neil Howe on the left and William Strauss. Um, they wrote the book together, Generations in 1991. It's funny when they started out, they had no idea what they would find. They had no idea they would find a cycle or a pattern. They set out to investigate why was their generation, which was the boomer generation, why was that generation so different from the Second World War parents, basically, from the parents. There was a huge cultural clash between these two generations. And as they examined this difference, they identified recurring archetypes of generations and like uh, like historical cycles or seasons, or they call them turnings. So four turnings and four archetypes, and they repeat every cycle, every long, which is approximately 80 to 100 years, a long human lifespan. So there's many different ways to illustrate their concept a little bit, but this is one way. And as maybe let's look at the high first. So a high is a period where the boomer generation found themselves in, and it's a no, I'm sorry, the silent generation just before the boomers. And it's a period of very strong and respected institutions. These were the institutions that the GI generation built after the Second World War, including the United Nations, um, um, including Bretton Woods. So there was very high trust in institutions. There was a very strong collective spirit, and that was much stronger than, let's say, the spirit of individualism. And society was really confident about where it was going. And then this kind of bottomed in the unraveling, which is the time when Generation X grew up and matured into adults, and that's the time when, by that time, it's fully reversed. You have weak institutions, you have very high, very surging individualism. Everybody's questioning authority. You have very high polarization within societies. You have different camps, left and right, is much more important than any other question. That I guess differentiates humans. Um, there's a reflection on the like what are the consequences of this fragmentation that we see in society, and society starts to reevaluate the values that led it to this place, and there's a new yearning for connection, and the crisis comes um, after that period, after the unraveling, and it's not hard to see why, because um, there's a demand for order and there's no order. There's a demand for strong institutions, but the current institutions fail. And with time, society is also kind of fed up with the polarization that we see, and it looks for emerging shared values and something to unify, something to gather around and band together and pull in the same direction. So there's the four archetypes. There's of generations. There's the prophet archetype. Those were the boomers, the boomer generation, the 68er in Germany, for example. Um, they inherited a world perceived as amoral, uh, complete lacking of values. And the prophets themselves are very driven by values, and uh, they're on a journey of it's a period of awakening, is what Neil Howe calls it. It's a spiritual journey, and they seek to purify society, establishing new moral order. Um, yeah, and it's a very strong shift in societal values. We have the nomad generation. That's the current generation X. That's, for example, Elon Musk, 50 Cent, the Jeff Bezos. There's many examples for the Generation X. They inherit a world of institutional decline. They're driven by pragmatism. They dismantle the failing systems, and eventually will also create resilient solutions during the crisis and act as leaders, pragmatic leaders to also to the hero generation. The hero generation will inherit this world of crisis, which started in 2008, and that we currently see, honestly, around the world. The hero generation is the current millennial generation, and the last in the last cycle it was the GI generation. They inherit this world of crisis, and it's a generation driven by optimism and unity. It's also a generation that was raised to be to be special. It's interesting. Neil Howe does also a lot of polling of the millennial generation. He looks at polls in general, but it's a it's a it's a generation that it's a generation of kids that grew up thinking they were special, that they had to be protected. Um, Suddenly, you could see family stickers on all cars. So it's just a very stark contrast to maybe Generation X and what they had to deal with as they were growing up. So the hero generation, they are great at teamwork, and they will eventually build the new institutions and new structure of society. Finally, the artist generation, they inherit this world of new institutions. It's they inherit this world of also economic abundance. And they run those institutions that were forged during a crisis which they did not experience. Um, um, but yeah, they're really good at running those institutions and finding compromises. This is another way to illustrate these four generations. We can see the hero archetype with the GIs and the millennials. The artist archetype with the silent generation, which, for example, Joe Biden belongs to, and the new Neil Howe calls them the homeland generation, um, which is also Generation C. And then the boomer generation, which belongs to the prophet archetype, and the nomad generation, which is Gen X currently. And it's a cycle, it repeats. And it's very interesting. You can see many markers that correlate with this with this cycle as well. For example, inequality and populism. On this chart, we see the wealth share of the bottom 90% and the top 1%, and inequality kind of peaks uh, before the crisis, and then um, gets better as like during the high and up to the awakening until individualism grows stronger again. Institutions get dismantled, become dysfunctional, and populism rises again. That's an interesting correlation. So, what does it mean for investing in a fourth turning? So Neil Howe, like I said, he works as a financial advisor now. Interestingly, so he's very well versed in that domain. He advocates a resilient approach. He that means like capital preservation should be a top priority. Risk management is really important. It's a time where it's important to know not just what you own, but how do you own it? It's not just what assets should you buy. It's also who's your broker and in what jurisdiction is your broker, and are your assets confiscatable? Um, so risk management becomes really important in that time. Um, Apart from that, he advocates to diversify broadly, of course, um, um, and we'll look also into a bit more detail now. Um, diversify broadly into certain things. Of course, he says avoid bonds because fourth turnings are periods where typically you see a lot of inflation, where societies have to get rid of really high debts and that accumulated over um, over two turnings. And so there's high inflation and fixed income instruments and cash savings are going to suffer in this time. It's not hard to imagine what works well. So the defense industry works really well during a fourth turning. Those are companies also in the military defense sector, uh, like Lockheed Martin, Rheinmetall, Palantir. But we've also already seen a lot of those growth expectations. Currently, we have seen that priced in already. Um, but yeah, they do really well in the fourth turning. And then, like when you think about what follows after the crisis, there's going to be a new high. There's going to be a new the new institute the out how the way Neil describes it is like this is a period where the outer world gets rebuilt, institutions get rebuilt. This is a period where societies take ambitious infrastructure projects. So when you look at companies also in defensive sectors such as utilities, consumer staples, but also construction, industrials, um, and materials. Yeah, material sectors, just sectors in general that profit from this rebuilding of the outer world that will happen at the end of the fourth turning and during the next high. Also, tangible assets such as gold do really well in a fourth turning. And interestingly, Neil Howe is a skeptic of Bitcoin. Um, Maybe he changed his views slightly in the meantime because the last source that I could find where he speaks about Bitcoin was 7 years old, and and one of the criticisms he had was that it would never get adopted by governments. Governments would just not allow to uh, for a cryptocurrency like that to become popular or to adopt them, to accept them as legal tender, for example. But a lot of that has changed. We have seen many nations accept Bitcoin as legal tender, and also the current U.S. administration is really pro crypto. Um, but yeah, in general, he thinks it really doesn't fit the millennial generation, the millennial archetype, because that's a generation that's really famous for risk aversion and has a need for a preference for regulated and transparent systems. And and just nothing screams so much individualism than crypto. It just doesn't fit very well in something that a millennial generation um, would want. Um, but he also says that he thinks government will explore their own transparent and regulated digital currencies, which may also better align with the millennials' demand for safety and accountability. All right. Now the podcast that I sent out, that was the topic for this webinar, was about Russell Napier. Not sure how to pronounce the name, and he was interviewed by Dimitri Kofinas and Grant Williams. And it's really interesting because he brings a very similar framework. No, he actually brings a completely different perspective, but ends up with similar conclusions. So let's take a look at who is he. He's a financial historian, Russell. He accurately predicted the 1997 Asian financial crisis, and he also looks at long-term economic cycles. He sees currently three really strong imbalances in the world. He sees really high debt levels. He sees large inequalities, especially in developed nations. Excuse me, um, and trade imbalances as well. And coupled with trade imbalances is also capital flow imbalances, because that's the other side of trade. Um, a country that runs a trade surplus will receive a lot of capital. So yeah, trade imbalance, but also capital flow imbalance. As a primary cause, this is China's policies from the last 30 years, and we'll go into that in a moment. So how did China in many ways cause those imbalances? So according to Russell, the peg that they did of the yuan to the US dollar in 1994, like um, led to a lot of those imbalances. It led to they really wanted to strengthen their export-driven industry. They didn't want their their currency to strengthen in that time. Um, um, yeah, and it led to a massive accumulation of foreign exchange reserve by by China. And what did they do with those reserves? They invested them largely in Western government debt, but also equities. But a lot of the money went into government debt. It also had an effect on interest rates because I think China is the largest creditor of the United States. And those large purchases of bonds suppressed interest rates and kept them artificially low. And that, as a consequence, led to asset bubbles and a lot of leveraging, a lot of leverage that we see in companies that would not have done so if the interest rates were more natural and higher, but also in sovereigns, in nations. What does he see now? Like I said, he has a good track record of past predictions. He sees persistent inflation going forward. Um, he foresees likely 4 to 6%. He sees financial repression, and we'll look into what that means. Um, and he argues that governments will we'll do a discussion right after. I just saw something in the chat. Um, that governments, yeah, they will take more and more control over credit creation and the money supply. So, and not independent central banks. So, so what does Russell mean by financial repression? So that's really the government's primarily use to manage the debt burdens and to reduce the debt burdens. And they do this, for example, by capping interest rates at a certain level that is typically below inflation. And they'll also often like compel domestic companies into buying government bonds. So they'll cap interest rates and often like force institutions to buy their debt. This obviously has an impact on investors. That has an impact on savers and anybody that has a fixed income asset.
Buckle up, our time is coming.
That's right. And historical historical use. We'll do the discussion right after, by the way. And this strategy of financial repression has already been widely employed by various countries, including in the past. It has been done by the US and the UK after the Second World War, also to manage high levels of debt that incurred during the war. We can see this for the United States here, for example, after the Second World War. Uh, we saw inflation rates of almost 19%, but yields stayed below 1%. So that's an example of financial repression that happened. And as a consequence, real yields went deeply negative. As like a next escalation of reduced interest rates or capital controls, and also that is something that is not an old phenomenon. We saw it many times in recent history. We saw it in Iceland in 2008 to stabilize their currency. We saw it in Greece, where they implemented ATM withdrawal limits, also to restrict capital flow. And we saw it in Cyprus in 2013. And yeah, the common thread here between all those capital controls is to stop capital flight. It's these are nations that are typically in debt, um, and the Dead Sea capital outflows, and they want to stop it. And maybe they already practice financial repression, and financial controls, capital controls are just the next step in that. And it's also a modern phenomenon, like we discussed. There's more examples here. I'm not going to go through all of them, but it's interesting that China also exercises still a form of capital controls. It still has a fixed exchange rate from the yuan to the dollar, and it has been using capital controls to prevent capital flight, for example. after the 2015 stock market crash. It's just not as easy to to move money out of the yuan system and into other markets. So it's financial repression and capital controls might sound exotic and foreign, but when you look in history or even in modern times, you see it all over the place. Um, Russell also sees a trend of deglobalization. Um, he, there it's he sees it as a the imbalances that he listed. They will have to get corrected at some point. Um, the It's an unwinding of those high debt levels, high trade imbalances, high capital flow imbalances. Um, we see this right now. We see this sort of friend shoring or um, just um, change of supply chains into your own, like do a lot of stuff domestically if you can, or at least um, shore it or move the supply chain to allies or friends. There's also a more national focus um, that 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 he predicts, and he has also made these predictions for a long time. So we can definitely see that more nationalism, stronger nationalism in many countries. Um, and yeah, he sees a more fragmented world, maybe a multipolar world between the United States and China. Um, there's some rotations that we can observe right now. We can see Europe inflows, um, and also driven by capital. He calls it repatriation. So when just capital goes home, moves home where it came from, right? Um, yeah, that's just a rotation that he sees in general. And driving factors are the geopolitical risk, the deglobalization that we discussed, the deleveraging, and all of that leads to a repatriation of the capital. And he's not very bullish on US assets, especially treasuries, of course, um, just like Neil Howe, but also equities, um, because a lot of them are also levered up. And as interest rates may rise, the cost of that will go up, and also because what we saw in the past couple of years was this were those capital inflows into the United States, back into the United States, because they had such a big trade deficit. So the capital went abroad and then came back in the form of investments. So as those capital flows unwind and reverse, that he thinks that's going to have an impact on US assets. So immediate impact will be heightened volatility, these capital repatriation movements. He sees suppressed interest rates in many areas, and this financial repression, and trade deals in the future, and maybe more tariffs as well. But the trade is going to be very interesting to observe. So how to invest according to him, and we can see some parallels to Neil Howe in the fourth turning. So he also has a strong focus on capital preservation. It's you'll have to find a strategy that preserves your wealth even in high inflation, even in a world where you can see financial repression and capital controls. We might, in a multipolar world, we might also see two main monetary systems, not just one, like we had in the last, I guess, 60 years. So he also puts a focus on capital preservation. So it's really important to know, like, what assets you own and how you own them and how you access them and in what jurisdiction um, your broker is, for example. Does the jurisdiction enforce property rights and so on? He also is bullish on gold and value stocks. He also avoids bonds. Um, and he's skeptic about strategies that worked in the past. Um, or yeah, like when we look at what worked over the last, like since 2008, really, um, that was definitely momentum stocks, growth stocks, technology, big technology stocks. Um, and all of that was also driven by a large US trade deficit and capital flows back into the US. So, yeah, he's just skeptic about things that worked in the past. And he cautions against US assets for that reason. Um, but yeah, really, any area that could be affected of capital flowing back home. All right, that's it. Um, that that was a bit longer than I expected, but I'm curious to hear, and I think I'm also gonna stop the recording soon. But what do you think about the two frameworks, the fourth turning by Neil Howe and Russell's framework uh, about deglobalization and unwinding of those imbalances? And yeah, I'm curious to hear your opinions.
Thanks, Silvan. Thanks a lot. I have a question. Why Japan? Because it seems like this economy has had its best days in the past. Well, like what? Why Japan, and why is it in the same bucket with Europe?
Let me go back to that slide.
Yeah.
Um, do you mean that slide? This one? Oh yeah, capital shifts to Europe and Japan. Um, I
Yeah,
I
exactly.
think I think Japan is an interesting case because I think they were definitely scared by Trump's actions. I did not myself see the data, but the market commentators that I follow, they said they saw large outflows by Japanese investors out of the US back into Japan. But I think Japan is a really difficult case because they actually have themselves the highest debt levels of any developed nation. And as a consequence, I think they're really likely themselves to, in the future, to do financial repression to force their domestic institutions to hold their bonds, to run high inflation. They're really likely to introduce capital controls for that reason. I think they're close to 300% of debt to GDP. Uh, I'm talking about federal debt. And so yeah, I think Japan is an interesting case. But 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 it was observable in the data. Apparently, especially that Japanese investors were really spooked by this U-turn in in the U.S. trade strategy. What do you think, Tim?
Right. But does it mean, because now you spoke from the perspective of Japanese investors, right? Would you also consider investing in Japan, not living there?
That's another good question, and Russell himself, he was actually really bullish Japan, and that was before I think the Nikkei really rallied in recent months and years. So he was a Japan bull, and he was right on that. Um, but I'm not sure. Me personally, I'm not sure going forward because like I said, it's another country with such high leverage, with such high debt. So, and another country likely to introduce capital controls. So, me uh, personally, I mean, I haven't studied this yet to to the end or to the limit, but um, my first instinct would not be to invest into Japan. What do you think about Japan as and its equity market, I guess?
Yeah, I don't know. I don't know enough about it, but it seems to be quite a bet on it that I don't think I'm willing to take.
Yeah, yeah, me neither. It's also interesting. I actually have some Chinese tech stocks, but Russell thinks that they really remain uninvestable because we might see a- a- any day there might be something around Taiwan. And what did we see with investments in Russia one day or 1 week after the invasion of Ukraine happened? All those investments got written off to zero. And I actually had a small investment there, and that got written off to zero. So he thinks China remains uninvestable um, in in the near to mid-term future. Um, but I'm not sure about Japan. Like I said, the debt levels they I think there's just better alternatives. Countries with lower debt levels that maybe also have a strong economy.
Right. Yeah, and the demographic challenges as well, right? In Japan, it's
Yeah,
tough. I think it's
yeah, definitely. You have that, in many developed nations, but yeah, Japan especially.
yeah. Cool. Thanks.
Thank you. What's your name? The other person in the call. All right. Is this? Yeah, it's being recorded, but I'll stop it now actually. All right. Um, let's stop this recording. But hope to see you next time.